Hi there, welcome to Kneppy Invest and welcome to the 27th of June 2025. Time is currently 2:55 p.m, so a lot of twos and fives. And we have about 1 hour and 15 minutes left of trading today on the final trading day of the week and the penultimate trading day of financial year 25. And I did make some, what do you call it? What's the opposite of additions or purchases? I made some disposals in my trading portfolio because I am adjusting how I trade from the 1st of July this year or next financial year. So I'll talk about that if I remember later in the video. Now, the agenda of today's video, we'll talk about the ASX today, have a look at the best and worst performing sectors, indices, companies, also talk about how the market, particularly the ASX 200 and the odds, has dropped significantly during the day, which is interesting in itself. And then after we have a chat about the ASX today, we'll turn our attention to the top 5 stocks of the day. Now, sometimes on a Friday, I do struggle to find 5 worthy companies or announcements to get into the top 5. No problem today. In fact, I left out a few companies that had definitely had a chance of being in the top 5, including Alliance Airlines, or whatever it's called, also Orthocell, AML 3D, and maybe 1 or 2 other companies. Then after the top 5 stocks of the day, chart of the day, Noble Oak did receive a price query from the ASX because the share price dropped 10% or so. And maybe I'll talk about one of your comments. Definitely not answering Robin Joseph Meladath question in regards to DXN. Have you checked DXN, data center small cap, recently gaining some contract with majors? He put that comment on yesterday's ASX Daily Rundown video. He must not have watched that video at all because DXN came in at number 4 on the top 5 stocks of the day. So I'm not going to answer that one because all Robin Joseph has to do is watch yesterday's ASX Daily Rundown video. I'm not angry, not upset. In fact, making fun of you. Making fun of you, Robin Joseph Meladath. Just watch yesterday's video and just watch me talking about DXN, a small data center modular, I think it's modular data center company. Okay, let's turn our attention to the ASX today. ASX today, I'm a little bit surprised. The ASX 200 and the small caps, not the small caps, the odds is in the red. And our futures were up about 0.5% in the morning. And in fact, at one point in the morning, probably within the first, say, 15, 20 minutes of trading, 15, 30 minutes of trading, the ASX 200 was up about 0.6%, which was understandable because we had a pretty good lead in from Wall Street. Dow Jones and NASDAQ both up is about 0.94%. Yeah. So we had a pretty good lead in from Wall Street. So I did expect a pretty good day on our market today. Now, I'm assuming here, without looking or delving a little bit deeper, with the very fact that resources is up 2.31%, pretty good day for copper, iron ore, uranium, maybe gold. I actually don't know about gold. Definitely copper, definitely, what's the other one I mentioned? Iron ore, and definitely uranium. That's probably why resources had a pretty good day. So I'm guessing if mining's had a pretty good day, tech's had a pretty good day, even small caps had a pretty good day. The reason we are down, I'm going to say right now, it's because of financials. Because the banks did go on a pretty good run during most of this week, and I'd say a little bit of profit taking has come in today. So we'll see if I am right in 1 second. But before that, you can definitely see the XAO and XJO have fallen quite significantly during the day. So a lot of negative sentiment in our market. I'm not sure what has caused that, unless it's just a bit of selling in the banks, because the American futures are up nicely. Hang Seng was down slightly, but the Nikkei was up a fair bit. So no weak lead in. Not actually, we lead in the rest of the Asian market because we start trading first. But when they open up, sometimes we can see our market adjust accordingly. So no real significant reason why our market is down. When I say a market, I'm talking about the XJO and the XAO. So let's turn attention to the best and worst performing sectors. You look at materials up 2.51%. Telecommunication, and really materials has been the strength of our market today. Now, telecommunications up slightly, probably because of Telstra. Energy up slightly, IT up slightly as well. And yeah, financials have had a bad day, but so have staples, healthcare, and real estate. So it's actually quite broad, our losses in regards to sectors. So six sectors down by more than 0.75%. So that's actually interesting. And the bank's down, 1.48%. Gold is actually down 1.1%. So definitely the banks have been a bit of a weakness on our market today, and that's why we're in the red. Okay, let's have a look at the ASX 20, down 0.23%. So I do expect BHP, Rio Tinto, and Fortescue are going to be by far the best performing companies in the ASX 20. I could be wrong there. There could be one or two others. Maybe WiseTech's had a really good day as well. I'm trying to think. Maybe Telstra's had a really good day. I don't know. Anyway, so let's have a look. 8 companies up, 12 down. And if we turn our attention to the best performing companies today, Rio Tinto up 5%, BHP up 4.26%, and Fortescue up 3.58%. I'm a little bit surprised these 3 companies are up by so much because iron ore wasn't up that much. Now, copper was up a fair bit. I was having a look at the copper just before I started recording, and copper's at a really interesting level. So copper's chart's definitely looking much better now. But iron ore wasn't up all that much. It's up about 1% so far today. So up 0.92% and 1% over the last 2 days. So it's up a little bit, and the chart does not look anywhere near as good as copper. So that also means gold must be down. Yeah, gold's down a little bit. There you go. Anyway, so let's go back to the top performing companies, and in the ASX 20, Macquarie Group's had a pretty good day, so a little bit different than the 4 big banks, and WiseTech is in that list of best performers, up 0.56%. Now, the worst performing companies today, banks or Transurban. Now, one of my trades did go ex-dividend. APA Group did go ex-dividend. I'm wondering if Transurban did. Maybe. I doubt it. I didn't see any announcement from the company. Just going to have a look. They did go ex-dividend. There it is. So a few companies have gone ex-dividend, so we can actually move on. I wouldn't count when a company does go ex-dividend. Sometimes I miss it. I wouldn't actually count that. And CBR is down a fair bit, 1.87%. CSL also down a fair bit as well, 1.82%. So some of our biggest companies are down big, but one of our biggest companies is up big as well. So BHP up 4.26%, CBA, NAB, Westpac, and CSL all down fairly big. So a little bit of a surprise there, but in hindsight, probably understandable that the banks have gone on a pretty good run. And when I say that, if you go back to the best performing, say, indices in the last week, the banks still up 1.89% in the last week, even though they're down big today. And if we go to the sectors, financials up 1.94%. In fact, financials materials both up significantly in the last week, and every other single sector is actually down, including energy down 4.23%. And staples down 3.1%. Wow. So I don't have any sympathy for any bank holders because they've had a pretty good week. Okay, now on to the top gainers and top losers. Okay, top gainers by percentage change. Okay, Argosy Minerals up 33%. I will talk about that company in my top 5 stocks of the day. Red Mountain Mining. I am not going to be talking about that company. However, just behind Red Mountain Mining, we have Sunrise Energy Metals. I will talk about that company in the top 5 stocks of the day. So what about Red Mountain Mining? RMX. They did release something today. I know that. Oh, that's right. The reason I did not include this company in the top 5 is because the share price is just above 1 cent. And the share price has only gone up 2 pips, but it's still up 22%. This company did release something today, however. High-grade antimony confirms exceptional Armadale potential. Do not even open up this announcement. So let's just have a look at the chart. Is the chart something to get excited about, even though share price is very close to 1 cent? And I actually don't mind this chart. If the share price was a little bit higher, I actually would like this chart. Now, we have seen a little bit of selling today because the share price was as high as 1.5 cents. We've seen some really big volume coming in. That could be a good sign. Looks like the company did do a bit of a consolidation back just over or under a year ago. So not the worst looking chart, but just because the share price is right on or just above 1 cent makes me a little bit hesitant. That's just me. I don't like holding companies whose share price is near 1 cent, definitely below 1 cent, not below 1 cent, but even near 1 cent. I'm a little bit hesitant about that. Okay, so it could be a really good announcement, but just where the share price is. What else do we have here? AML 3D up 18.75%. They did release, what was it? Someone on the board or something? Yeah, senior US Navy program lead appointed to board of AML 3D USA was not marked price sensitive. Not marked price sensitive. I'm thinking the market has gone, oh, this is really good. Senior US Navy program lead. Anyway, so let's have a look at the chart for AML3D, see if this is a chart to get excited about. I would say, ooh, I was going to say no, but today could be an interesting, just because the share price has popped up. Now, it's not my favorite type of announcement to get excited about. I do prefer financial stuff. This has nothing to do with financials. So, for instance, if AML3D released an announcement saying they're going to be profitable from now on, that would be such an exciting announcement. Or they are cash flow positive and they expect to remain cash flow positive moving forward. I'd get really excited about that and this chart as well. So if they release that sort of announcement with this sort of one-day candlestick, turn me excited. Anyway, but not today. What else do we have here? Nothing. I should go down to say that. Top gain is by market cap. Developed Global, Chalice Mining. There's Alliance Aviation. Share price up 14.22%. One of the other companies that had a good shot of getting the top 5 stocks of the day. They did sell some stuff. Spare parts inventory sale. That's why the share price is up. They did get a fair bit of money from this. They also sold some engines, so they're getting a fair bit of money from selling some of their stuff. And the chart does not look interesting. Chart does not look interesting at all. In fact, the share price is in a downtrend. Even though the share price is up a lot today, still in a downtrend. So I don't care about that chart. Anything else here I care about? Core lithium. Worker. Let's have a quick look at Worker. WRK. Let's just see what the chart now looks like. No, don't mind this chart. Don't mind this chart at all. And I'm just going to have a look at Core Lithium as well, because they did release something really interesting a while ago. And when I say a while ago, I'm talking about the 14th of May, which is just over a month ago. And since in the chart does not look all that bad. The share price did get above 10 cents briefly today. So I don't mind this chart for Core Lithium at all, which is interesting. Just because of the company and the sector they're in. Top losers. No, I've already talked about the top gainers. Top losers today. Nothing much here except the stock of the day. Reece, REH, share price down 17% on a negative trading update. No brainer for stock of the day, particularly a company that size. Market cap is 9.3 billion. So the share price or the valuation of the company has dropped probably about well over $1 billion. Yeah, well over $1 billion. So the valuation of this company has dropped by more than $1 billion. Now, this is really interesting. And now I'll talk about Reece later in the video. Don't need to talk about it now because it's a stock of the day. A few other companies on this list just up and down, like Locksley Resources. Share price has risen a lot and then dropped. So we can move on. And top losers by market cap. There's Reece. And apparently, a couple of ETFs doing bad. World X Australia Carbon Aware and Australia Select High Dividend Yield, both down a fair bit. What's happening there? Maybe some very high dividend yield companies have gone ex-dividend. Oh, let's see that SYI ETF. Let's have a look. I'm assuming that's what's happened today with this one. I want us to see accept and save cookies. Holdings, let's have a look. Look-see, Westpac, NAB, Macquarie, ANZ, Telstra, Woodside, QBE, Coles, Fortescue, Santos. Index top 20, I don't know. It just seems like a top 20 ASX. Yeah, anyway. Some of these companies are not high dividend yielding right now. Some of these companies have a really low dividend yield, particularly the banks. Some of the banks have a really low dividend yield compared to historical levels. Okay, so I'm just assuming that's why that's down. Synlait Milk. Company I was trading recently, they then got out because of my rules. And let's see this chart. I'm pretty sure this was a chart of the day. Oh, we've had a moving average crossover. Share price now. The chart does not look good for Synlait Milk. So there is the beautiful uptrend. And then, well, maybe not beautiful, but then the trend killer event on the 25th of March 2025. That was an instant sell for me. Got out either that day or the next day. And the share price is now dropping down. Okay, follow your rules. Very important. Follow your rules. And Noble Oak down 10%. Chart of the day. Shine Justice and Environmental Group. Okay, now onto the top 5 stocks of the day. I've already talked about the companies that did not quite make it. Apart from Orthocell, I am an Orthocell shareholder, so share price up 4% on first surgical use of Rempla in US 1.6 billion US market. I said that wrong. But anyway, so first surgical use. Again, not the sort of announcement that will get me overly excited, but I am a shareholder, so the little things all matter for companies you own, and this is a step in the right direction for Orthocell. But again, I think it's the thing I'm really looking forward to now is how much cash receipts and revenue have increased because they've entered into the US market. That could be really, it could be really high, it could be really low, but we'll wait and see. Okay. On to the top 5 stocks of the day. We'll start off with company coming in at number 5, company called GTN released earnings update. Simple reason why this company is in top 5, because GTN financial year 25 earnings update. I am trying to think what this company does. Do they own radio stations or advertising for radio stations? Something like that. They either own radio stations or they do advertising for radio stations. Let's see what they do. And there's no about section. Look at an about section. It's not that hard. Proposed capital return. Not sure why. And again, no about section. GTN. Is it that hard? Let's see what Comsec says. Provides advertising platforms that enables advertisers to reach audiences frequently. Yes. I think they have the chopper in the sky talking about the traffic, something like that. Anyway, this is a fairly small company, but they did, and there's not much growth in this sector, I would assume, but they did release an earnings update. So let's have a look at this one. The share price is up. I'm assuming one of the reasons why the share price is up because of capital return. For some reason, Australians love dividends and capital returns, even though there was actually a really good article in Morningstar, and the title of that article was, Are franking credits hurting Australia economy? I would actually answer yes to that. And because the reason I'd answer yes to that is because dividends suppress innovation and growth. In fact, if you see a company just issuing 100% of their profit, issuing 100% of the profit in dividends back to shareholders, the company can't grow. The company, by definition, that company cannot grow. And because of Australians' obsession with dividends, that is actually harmful to our economy because it suppresses innovation and growth. Now, there are some companies who should be issuing most of their profit back to shareholders as dividends because they have a really low return on equity. But there are some companies that have a pretty nice return on equity that have a high dividend, and that's the wrong thing to do. It's a whole reason why Berkshire Hathaway don't give dividends back to shareholders, because they can do much better with their dividend. They can reinvest their profit back into the company to create further growth. Anyway, so that was a good article in Morningstar. I might do a sound video on that. But anyway, GTN Let's have a look. So this company is fairly small. And when I say small, I am assuming a market cap of about 150 million, $123.1 million. So keep that in mind as we have a look at some of these numbers. Now, they expect revenue to be between 178 to 182 million, down from last year, 184.2 million. Adjusted EBITDA to be between 15.5 and 17.5 million. Last year was 22.3 million. So if you compare the market cap to the adjusted EBITDA, it does look cheap, but this company is, I wouldn't say dying, but they're sort of losing, I wouldn't say losing money, but they're not growing. They're not growing. Anyway, closing cash to be in the range of 23 to 25 million. Note, this is after paying 8 million in dividends, repaying debt of 8 million, and a share buyback of 5 million during financial year 25. GTN was successful in finalising a new 35 million bank debt facility, which remains undrawn. Absent a material deviation from the above forecast, the company does not plan to update its guidance prior to the release of its Appendix 4E. Now, the funny thing is, actually, I won't look at the chart now. I'm just going to have a look at Fiscal AI. And we can see if my thesis is this company's not growing is true. So let's have a look. So revenue growth has been 2.9% over the last 10 years. Yeah, so return equity is like almost zero. Return equity 1.3%. Return invested capital negative. Gross margins, operating margins 0.5%. So very low margins for this type of company. But let's just have a look at their revenue. Revenue has gone up over the last 10 years, but we'll say relatively flat. So company did have revenue of 185 million in 2018-19. It's the same sort of level right now. And if you have a look at the income, it's probably up and down. Yeah, some years it's negative, some years it's positive. So not a very exciting company with not much growth prospects, I would assume. They also have a dividends. Well, I've never actually looked at this in the past. And this shows you how dividends have increased or decreased over the last 10 years. And in fact, they started to increase, but there's some years where there's no dividends, it looks like. Anyway, let's have a little chart for GTN. I have a feeling this chart doesn't look all that bad. Yeah, this chart doesn't look all that bad, does it? It's a nicely upward sloping trend. But if you have a look at the weekly chart, going back a little bit further, not the best looking chart. Not the best looking chart for GTN. Although the weekly chart doesn't look bad either. Anyway, so that's our GTN coming in at number 5. Coming in number 4, we have Oceania Healthcare, I think. Oceania Healthcare. Share price up 13.89%. They did have their AGM. So chairs addressed to shareholders, CEOs addressed to shareholders, annual meeting presentation. So this company services elderly with housing, something like that. I think it's in New Zealand. I'm pretty sure it's in New Zealand because they do talk about, I did go through this very quickly, they do talk about aging population in New Zealand. So I'm assuming they just have operations in New Zealand. So they're talking about care beds, care suits, ILUs, whatever that is. And they do mention aging population somewhere. There it goes. New Zealand's population is aging rapidly with the number of people aged over 75 expected to double by 2050. So that does seem like a bit of a tailwind. But I'm going to say, just put this out there as a counter. Now, there's a lot of work being done in anti-aging. Could anti-aging affect this type of company in the future? I think it depends on how confident you are on anti-aging. And I think, and I'm fairly confident that eventually, I wouldn't say we're going to solve aging, but we are going to at least slow the process of aging. So that's a definitely possibility. And that could significantly affect this type of company. But they do have a 5-year strategic plan, which I do like that sort of thing. And the market seems to like it. So market seems to like this announcement. Nice little outlook section, but let's have a look at the chart for Oceania Healthcare. Is this a chart to get excited? Oh, no. Oh, that's the weekly chart. In fact, the share price is just bouncing off 50 cents, which is the long-term low for Oceania Healthcare. There you go. Well, that's the weekly chart. Daily chart, not for me. Looks like there is a bit of liquidity issues, and possibly the whole reason share price is up today is just because there's low liquidity. You can see a bit of a spread between the first buyer and the first seller. So if someone is really keen to buy, they will buy at 63 cents. But if you're patient, you probably could buy this at a lower level. Anyway, that's Oceania Healthcare coming in number 4, just because share price was up 13%. And I'm sort of regretting that now. Okay, coming in at number 3, we have Sunrise Energy. Share price up 30%, 26.82%. Share price $1.13. So remember that other company, the share price was up a fair bit. The share price was 1.1 cent. If the share price is up 26% and the share price is now $1.13, I'm going to pay a little bit more attention to that particular company. Sunrise Energy Metals. What does this company do? Metals that are energy, is that uranium? Anyway, high-grade scandium assays returned at Sysiston. I don't know anything about scandium. It seems like over the last 5 or so years, we've seen a lot more of these more obscure elements getting a lot of attention. Scandium. I wouldn't have any clue how to read these results. 7 meters at 884 parts per million from 1 meter. Is that good? Is that bad? I'm assuming that must be good. That's a pretty... Anyway. Scandium is a chemical element. I just want to know what's it used in. Aerospace industry. Scandium aluminium alloys are used in aircraft components, sporting goods, high-end bicycle frames, baseball bats, and lacrosse sticks. There you go. Solid oxide fuel cells, 3D printing. Okay. Scandium is considered a critical mineral by several countries. Yeah, that's another reason why it's sort of hot right now, maybe. Demand for scandium is growing, particularly in the aerospace and renewable energy sectors. Okay, so there are some things to like about scandium. It is a critical mineral. That's another reason probably why the share price has popped up, even though I can't read and understand the results of the drill. So let's have a look at the chart for Sunrise Energy Metals. Is this a chart to like? Oh, yeah. Oh, yeah. Look at that. It's actually a really good chart. Look at the volume as well from start of April. Share price popped up on the 11th of April, up 40.98%. We did see a bit of a pullback. Nice time to buy on this pullback. And the share price is rallying again. Share price has gone from around about 25 cents to 30 cents up to $1.10. So a pretty good period of time for Sunrise Energy Metals. Markup of this company, by the way, is, I am going to assume it could be anywhere. I'm going to say it's $200 million now. Oh, 121.25 million. So still not significantly high, but again, for me, this is more of a story stock. You're going to have to really believe the story here. For me, I'd have to really believe the story, really believe, trust the management for me to hold this for the long term. Otherwise, for me, it's more likely going to be a trading stock. And even then, less so. Coming in number 2, we have Argosy Minerals. Share price up 26.7%. This actually, I wouldn't say got me excited because it's lithium carbonate, but it seems like they're selling something. 60-ton lithium carbonate spot sales contract executed. It's like, are they selling lithium carbonate? Okay, that's interesting in itself. Spot sales contract executed for 60 metric tons of battery quality 99.5% lithium carbonate product. Fixed sales price reference from SMM battery grade lithium carbonate price. I don't know anything about this company, and this is really the first time I've looked at this company. Looks like they're out of bonus areas, so maybe Argentina, that sort of area. We're pleased, says the managing director Jerko Zvela, we are pleased to receive such strong interest for the sale of our battery quality lithium carbonate product. I just want to know how much money they're making from this. And the next thing I'm going to do is have a look at the company's most recent Appendix 5B. Is this a recent thing? So quarterly cash flow report, 28th of April. Is this a recent thing? It seems like it is because no receipts so far. And for me, this is exciting. Company's now in production, looks like. Anyway, if you have a look at the activity report, which is something I did not do, they probably should mention that. Here we go. Highlights: progressing at 12,000 tonnes per annum project development. Sort about lithium brine, spot sales contract executed for 20 metric tonnes of battery quality. Yeah. Anyway, that's the first time I've really looked at this company. But the chart is a chart, interesting. And the other thing is, the share price is fairly low. It's about 2 cents, but at least it's more than 1 cent, well above 1 cent. So let's have a look at the chart of this company. And because it's lithium, it's not going to look good. However, so the share price has dropped a lot. So share price got as high as, what was it, 80 cents back in early 2023. So share price has dropped, what's that? So 90% would be from 80 cents to 8 cents. So 8 cents to 0.8 cents would be 99% drop. So share price has dropped almost 98% since the highs. And that is a problem when you are a commodity-based company. If the underlying commodity you are mining drops a lot, your share price is going to drop a lot. And that is why I don't own these sort of companies for the long term, because the cycle can turn against you and the share price of the company can drop a lot. Now, the volume today has been a lot, pretty big for Argosy. I wouldn't say this is an absolute breakout. Share price did get as high as 2.3 cents, so has dropped a little bit. So share price was up probably 40% at one point today. But this could be, with that big spike in volume, this could be sort of the bottom. And if we do see lithium prices starting to rally, this could be an interesting play. Could be. So anyway, does it belong in the number 2 position? I don't know. I think if I had my choice again, I might mix up the top 5 stocks. I'd take out Oceania Healthcare. I'd put Sunrise at number 2, maybe Argosy number 3, and maybe I would include, maybe, I don't know, maybe Orthocell at number 5 instead of Oceania Healthcare. Okay, the no-brainer, however, coming in at number 1, the stock of the day, is Reece Limited. Share price down 17.57%. Oh, the director has resigned. Financial year 25 trading update. So as soon as I saw this announcement, I went, ooh, rubbing my hands going, ooh, this could be good, this could be bad. It's really interesting. Reece Limited was featured in an article I read this morning. In fact, this article mentioned 3 companies as being potentially cheap. Reece, what was the other one? PWI Holdings and IPD Group. In fact, I'm going to see if I can find the article. PW Holdings, Reece, IPD Group article. See if I can find it. Oh, yeah, here it goes. Livewire Markets. 3 stocks that could be hit by tax loss selling. So this could be, who is it? Just James Dean, who loves tax loss selling or something like that. And yeah, talking about Reece. Patrick Polk says, I've long considered Reece. By the way, this is via Rich Life. I've long considered Reece a high quality stock. And I was thinking when I read this, maybe I should do a sell-in video on Reece because he just mentions it's a high quality stock. Is it a high quality stock? Maybe, I don't know. Anyway, so Reece, nice article, by the way. PWI Holdings, and the company I did like, but I'm not sure, is IPD Group. Anyway, so good article there. And maybe I should do a reaction video to that. Anyway, so it was really interesting. I read this article this morning. This was released 2 days ago. Read it this morning, and then lo and behold, Reece released a trading update. As you can see there by the share price, it was a negative trading update. Not surprising. This space, they sell, they're a plumber or something like that? Yeah, leading distributor of plumbing, waterworks, and HVAC products. Okay, so they mentioned, where was it? As anticipated at the half year, the trading environment has remained challenging during the second half of financial year 25, driven by ongoing housing market softness across both regions. Underlying volumes continue to be subdued, and even margins remain under pressure as we navigate the cycle. Here we go. So a company like this is or does undergo cycles, and maybe they're at the bottom of the cycle or near the bottom, possibly. As a result, Reece expects group EBIT to be within the range of 548 to 558. Now, they did not mention how this compares to guidance, and I should have done this actually before I start recording. If we have a look at the half-year results, I want to see if they did release any sort of guidance. It looks like they did not. Looks like they did not. Now, EBIT in the first half was 305. So that means, EBIT's a fair bit down in this particular half as year. So 305 in the first half and maybe 250 in the second half of the year. So Peter Wilson, the CEO, says our expected financial year 25 results reflect the backdrop of continuing macroeconomic headwinds. You can't really tell by the markets, can you? Share price of many companies still going up. And on occasion, we do see there's really negative trading updates because of weak economy and difficult trading environments, particularly with retail. I've seen quite a few negative updates from retail companies and now Reece. We have not seen a material improvement in trading conditions in the second half. In Australia and New Zealand, volume settings remain soft, and recent interest rate cuts have not yet translated to improved housing activity. In the US, our high exposure to residential new construction sector continues to impact our performance. I have read that the US property market right now is really weak. We have seen similar cycles before and remain confident in our longer-term approach. Okay, so in this particular article, Mr. Pat Polk did mention that share price has dropped a lot and down 45%. It naturally caught his attention. But with share price dropping, he also mentioned that it can be hard. As a result, it's rarely a comfortable experience buying one. This instance is no different. So he's just saying, with share price dropping because of weak market conditions, it can be difficult buying a high-quality company when the share price has gone down a lot. But if there's good value, it shouldn't be that difficult. Maybe. Anyway, let's have a look at the chart for Reece. R-E-H. Now, I do remember the share price of this company going on a massive run. When was it? Yeah, massive run back at the start of 2024. Share price popped up, and I just didn't understand it because this was when interest rates had been rising, and it just didn't seem right. Share price popped up, 18.3% on the 27th of Feb, and that was almost the high. So I did see that and went, oh no, this is not a trade for me. And also the valuation of the company was quite rich at that point in time. The other company that went on a big run at that point was, there's another company in this space. What is it called? I forget what it's called. In fact, I could tell you. If I go to, it should be my, in fact, I don't know which watch list this is in. And the easy way to find out is professional services. I'm not sure if it fits in professional services, but that's where it is. Maybe manufacturing. And I will be able to tell you right now what the other company is. Although maybe the other company is in a different watch list, which it shouldn't be. They should be in the same watch list. Anyway, this other company, which I can't remember right now, the same thing happened. The share price popped up. I didn't understand it. And I got into a little bit of a debate with someone on Twitter or X because I said, I'm not sure about this. And this guy said, oh, no, it's so undervalued. I was like, no, it's not. It's not. Anyway, so that's a whole different story. Anyway, so let's have a look at the chart. So share price of Reece was actually lower than it was now, or not all that long ago. Got as low as about $13.38 on the 7th of April, and now it's at $14.32. So interesting level for this company is around about about $13. That was the lows back in June 2022. And then during the COVID-19, the share price dropped to as low as $8. The P ratio of this company is still well above 20, maybe even closer to 30. So I'm not sure if there is any value in this company at these levels. So let's have a look at this. REH, Reece. So revenue growth around about 10 to 15%. So nice. In fact, 16.3% over the last 10 years. So definitely, I would maybe consider this high quality. Earnings per share growth at 7.3%. So it's a little bit, I wouldn't say disturbing, that revenue is growing at a quicker rate than earnings. I'd like to see the complete opposite. Don't really care about yield or payout ratio. That's unimportant. Gross margins, 28.8%. Operating margins, 6.0%. I'd probably like those to be higher for me to really consider Reece to be a high quality company, particularly operating margins. That seems fairly low. Return equity, 11.2%. Return invested capital, 8.4%. So that's borderline, very borderline. So the feeling I get just by looking at these numbers, very rough look, is borderline high quality company, more than likely just below the high quality spectrum. And the P ratio, 29.4. Nothing to like with the chart, by the way, unless you think there is value. Unless you do think there is value. But I wouldn't be there just yet. Okay, now on to the chart of the day. And we're going to be talking about Noble. Oh, they did release a price query today. Yeah. So they did have a price query today. And yeah, they did not answer anything of note. They just said no, not applicable, and no. That's boring, Noble Oak. Now, the share price down 13% on nothing but noise. Can you say noise? Volume 79,000. If you look at the trade history, yesterday the share price was up 14.3%. Okay, so share price up a lot yesterday, down a lot today. Noise. It's noise. Even the volume wasn't that big. So was the ASX? Oh, this was about yesterday's share price rise. This was not about the share price drop today. It was the share price rise. And yeah, there you go. So let's have a look at the chart for Noble Oak. And I would say that this one chart does not look that interesting. Oh, look at the volatility. The volatility in this one has been extreme the last few months. Share price as low as $1.30, as high as $1.64. Yeah, I don't know if this deserves to be chart of the day, but it's sort of interesting just the volatility we've seen the last few days. And by the way, if you look at the next trade, if someone really, really wants to buy this, they'll have to buy $1.49, and that means the share price will go up. What's that? About 8% in one little trade. Okay, and now quickly through all those companies I mentioned, or just following very closely. First one is Collins Food. I think this could be a nice little buy. Share price keeps on going up another little bit today. Cogstate, this is one I did take a position in. Oh, and the share price is up a little bit as well today. And then from the few companies I mentioned a few days ago, Drone Shield, what's happening with Drone Shield? Share price down, hasn't reached the peak. Maybe this is sort of the one-day candlestick where you have seen a bit of selling coming in. So we have seen increased selling today, not as bad as what we saw a year ago. Tasme, really interested in Tasme and SRG Global. And Tasme is up 3.06%. I don't mind that chart. And SRG Global, I probably don't mind this chart either. If it happens. There it is. I don't mind this chart either. I would have been surprised to see the share price of Tasme or SRG just pull back a little bit. And that could be the time to take a trading position in both of those companies. Okay, that's it. That's it for today's video. Oh, no, one thing. I did sell some stocks today, some of my trading positions. Satire, I took profits, a 10% profit with this one. And the reason I sold this one, well, I'm slightly adjusting my trading philosophy and no longer am I going to be trading these type of setups where the share price is in a downtrend. Share price has just dropped a lot, and I think the share price will bounce. And the reason behind that is, I wouldn't say it makes these sort of setups make me a little bit more nervous, and I just don't like it. But anyway, I decided to sell on Cettire today because the share price bounced to the 20-day moving average. It was that simple. Plus, I'm adjusting my trading philosophy. And the other one I traded was MVF, Monash IVF. So both of these I expected a bounce, and finally I got the bounce, and I'm taking profits as the share price meets and hits the 20-day moving average. And both of them, 10% profit. So I'm okay with that. And that 10% profit is over a 2 and 3 week period. So I'm okay with that. 10% profit over that sort of period of time, yeah, I'm going to take it. Particularly with these sort of setups where I'm not that confident the share price is going to go up much from there. Okay, so those are the two disposals I made today. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.